Oh, welcome in to a daily editorial here on the KE Report. I am kicking off today with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, let's start off with the gold price, and I just have a general comment for you. When it comes to the pop that we saw on the back of geopolitical issues, and now the at least short-term pullback that we're seeing in gold, what do you think the odds are of gold setting up a higher trading range? Maybe not fading the whole way back to the recent lows around 1450.
It's an interesting question, Corey. I think we're going to see some more downside in gold. Looking at the chart, there is initial support probably around 1520, and then you have some support that comes in 1485, that area. So those are the two levels. And also the 200-day moving average, it's only at 1433, but it is rising pretty fast. So that should come up. I mean, is gold going to come all the way back down to 1450? I'm not really sure. It's possible. I think we are going to see more selling. I mean, if you look at the net spec position, I mean, it has come down a little bit. But there's still a lot of specs in the market. So I'd look for a little bit of selling pressure there. Is from a very short-term standpoint, the miners are still kind of underperforming the metals. So that tells me there's probably a little more selling coming. So it's hard to say. I mean, it remains to be seen where gold is going to shake out exactly. I do think that the peak that we made at the beginning of the year, I do think that's going to hold at least for a couple months, maybe a little bit longer than that. So, I mean, what you asked, that's really the question. Are we going to see more of a correction or a consolidation at a higher level? I'd lean to correction, but I really don't know, and we'll have a better idea when we get more data.
So right now we could be in for a little bit more of a correction. Remember, this current so-called correction has only been maybe a week long. What about GDX though? That recent high didn't quite get to the highs in 2019. Do you see that high right around 30 holding for a while?
Probably. If gold is going to correct more, then GDX is probably going to correct more. As I said, based in the very short term, the miners are lagging or at least not outperforming the metals. So there's no hint there that they're about to go higher and GDX is about to break above that 30 peak. I mean, good recovery, but it remains to be seen. We could just be in a bullish from a big picture standpoint. We still could be in a bullish consolidation since September. I mean, that's when we started to correct. So we're in a larger correction, it looks like, and it could be evolving as a bullish consolidation. Because if GDX, even if it tests 26 again, and it was presuming it bounces from there again, because that looks to be a good floor. I mean, in the very big picture, that's a bullish consolidation that's setting up for that huge breakout. I just don't think the huge breakout is a month or two away. I think it's going to be longer. But I mean, with that said, Corey, the market has since September in that correction, the market has acted better and stronger than I've expected. So, we'll see what happens. The only strong call I can make right now is I think the highs from the first week of January, I think those are going to hold for a couple months at least.
Okay. Hey, you know what? That is, I think, reasonable, but let's just see what other news or what comes out of maybe left field to maybe drive these metals higher. Let's also talk about the U.S. equity markets, because U.S. equity markets seem to just have nothing in their way almost day after day. Even if they open up lower, they garner a buy throughout the day. Even on the back of what seemed like bad news for the geopolitical news, they still garnered a buy throughout the day. Do you see a correction coming for these U.S. markets that you have to say are due for some sort of a correction?
Yes, that's a strong yes. I do think a correction is coming. I don't know if this is the ultimate top. I mean, maybe we see that later this year. But Corey, the S&P is up basically 40% in the last 12 and a half months. I mean, that's a huge move. I don't want to say it's gone parabolic because it did just bounce off the 200-day moving average. Looks like in October, or it came close to doing so. So the momentum is still really strong, and it could be in blow-off mode and not towards the end of that blow-off. But if you look at sentiment indicators, they are all really pointing to extremes. I mean, one example is short interest in the SPY ETF. That's at a 2-year low. And sentimenttrader.com, I mean, they track sentiment and do a great job. And they had something like at the bottom at the end of 2018, it was something like 55% of their indicators were at bearish extremes, which was quite a lot. And now, or at least at the end of December, it was something like 55% of their indicators were at bullish extremes as far as sentiment and stocks. So it was the complete opposite. And also that reading that they just had, that was the most bullishness, I believe, since March of 2000. So a lot of sentiment indicators for the stock market are hitting worrisome levels. Also, we could keep an eye on the dollar. I mean, it was kind of starting to break down. Now it's rallied a little bit. I mean, we'll see what happens there. But if you look at gold, the stock market, and the dollar, we could see counter trend moves. You could see a little bit of a rally in the dollar. Uh, Maybe that causes precious metals to remain in correction mode here. And at the same time, that could probably hit the stock market. So that's something to keep an eye on. However, Corey, this is really interesting. If we do see a stronger dollar for a little while and we see the stock market sell off, ultimately those things are going to be supportive for gold because when those things happen, and we're not talking about them happening for like a week or like 2 weeks, they'd have to happen for like a month or two or longer. If that transpires, the market is going to look at that and think, well, the Fed is going to be more likely to cut rates. So that it's just something to keep an eye on. You have to anticipate how these things could play off and then what play out, and then what are the second order effects of that. So a little bit of a dollar rally, correction in the stock market. The second order effect from that could be the Fed talks more about cutting rates again. Then that helps mitigate the correction in precious metals. So that's what I'm thinking about right now.
Okay, hey, that all makes sense. And yes, all these markets are related. However, do you think if we get some sort of a correction or severe correction in the US markets, that impacts the metal stocks? Because these stocks, even though they are still trying to be considered safety plays, it's more the metal that's a safety play. And the stocks, no, they have been known to sell off on the back of broad market weakness.
Well, what would happen in that scenario is the stocks would the stocks would underperform the metals. I mean, because the stock market getting hit, that is better for gold than the gold stocks. So that's probably what you'd see. But I mean, at the same time, the stock market getting hit, you see that happen. Eventually that would be bullish for the gold stocks. It's just when it starts happening, when it's going on, and the precious metals are correcting as well. Silver gets hit more than gold. The gold stocks get hit more than gold. But gold starts to outperform the stock market, and that's a good thing. That's what we want to see.
Okay, fair enough. And you know what? Gold has been performing quite well recently. It just seems like right now, after that pop early on this year, still might be in for a little bit more consolidation. But we also need to consider what's going on in the dollar. If the dollar keeps breaking down and just how extended the U.S. markets are, Jordan, there's not much more to say here. You've outlined the timeline for GDX and gold, and I think it just continues to be a stock pickers game when you drive down into some of the miners, although the miners in a broad sense have done quite well, but especially into the junior and exploration companies, which you also follow on your newsletter. Take us through your strategy and what you've employed when it's come to some of your recommendations and what you like in terms of stocks, the type of strategy that these stocks have.
Well, Corey, what I'm looking for is basically I'm looking for, if it's a producer, I'm looking for something that has production growth. If it's an exploration company, I'm looking for something that has very strong potential to either grow a discovery or make a discovery. So that's kind of what I start with. But when the market, when we are in a correction, the thing you want to do is look at the strong stocks that you missed and see if they're correcting. There's one stock that's getting hit today that new subscribers of mine, they probably don't own it, but this is a high quality junior. It's getting hit. that's an accumulation opportunity for new money, basically. So I'm looking for, and for me personally, I'm looking to see, are there strong stocks out there that I missed? And if those sell off, then I can get into those. I'm not going to be, you're not going to be able to buy those like dirt cheap. It's just when something corrects 15 or 20%, that's been really strong, you have to hit the bid and take advantage of that. So yesterday I was researching an exploration company that's done really well. I'm evaluating how much potential it has. And that's something that, I mean, if that corrects 10 or 15%, I'd be really excited about that and, possibly look at getting into that. So, I mean, that's the one way to look at these corrections. Look at the strong stocks that you missed. Maybe they correct and they give you a chance to get in. Don't expect to buy them 30 or 50% cheaper. It's probably not going to happen. And then, the riskier, slightly lower quality things, those could become value buys because those don't have quite as much buying during a corrective period. But if something like, those things you can be a little bit more patient on. But, if you see a fishing line sell off there, you have to take advantage of that. Or, if this correction consolidation transpires for a couple months and you see these things get to really good levels as far as values, you have to buy those. And then what happens is when we get a recovery in the sector, GDX makes that big breakout, then these things that are lower quality, they can really shoot higher really quickly when the market is running. So that's kind of my strategy for this correction.
All right. Thanks for those insights, Jordan. I find that interesting. And yeah, be paying close attention to the stocks that you like. And if you see a fishing line sell off, absolutely take that opportunity as long as it's not on some significantly bad news. But just be monitoring these stocks closely and make sure you understand the timing of news when it is going to be coming out in the near term, because news still does drive a lot of these stocks. Jordan, thanks for your time today. Enjoy the rest of the week, and I will see you soon in Vancouver.